What's up, guys? Welcome back to DCA. Today what we're going to do is take a look at Ethereum. We know that of late, ever since November, the market has been fairly bearish with a sudden reversal that we've seen starting several days ago. So right now we're trading near $3,200. What we're going to look at today is one of the more bullish signs for Ethereum. Specifically, what I want to focus on is the number of addresses holding 10 or greater Ethereum. So this is essentially showing us any address that holds 10 Ethereum or more. So at the moment, the number of addresses holding 10 or greater Ethereum is right at around 280,000. Okay, so 280,000 various wallets hold 10 or greater Ethereum. Now, what we want to look at today specifically is the trend in this number. Obviously, if you see this number rising over time, that is a very bullish sign. And if you think about it, there were times when you could purchase 10 or more Ethereum for just a few $100s, right? And now we're at a place where if you want to acquire 10 Ethereum, it's going to cost you at minimum $32,000. So that's a fairly significant investment required to get to this level. What we see if we go back in time, we're very near where the all-time high in terms of wallets holding 10 or more Ethereum was at. So this point occurred, the all-time high occurred back when Ethereum was only around $430. So if you think about it, the investment required to achieve 10 or more Ethereum when we reached our peak in November of 2020, that was only approximately $4,300. Whereas, as we said, now you're looking at an investment of at least $32,000 to get to 10 or more Ethereum. So the relative change in the investment required to achieve 10 or more Ethereum has significantly increased, about 8x or so. We saw in November the number of wallets holding 10 or more Ethereum started to steadily decline. We went from around 295,000 all the way down to around 260,000. And we hit that low about here in June. But notice what happened then. In June, when we were trading right around here at around $2,100, individuals started acquiring Ethereum. Right in this area, we bottomed out right at around 260,000 wallets and have since been trending up. We were at around $2,200 when we bottomed out. And then the trend started to reverse and in fact started to increase once we got down to 2,000, 1,800, and then finally $1,700. When we were down at this level, this $1,800 level, that was at a level where we've said in prior videos is a level of last resort, because that is actually the realized price level for Ethereum. And if you don't know what realized price is, that's simply the level at which the average holder owns Ethereum. So you can think of it broadly as an average price on chain. So it makes sense, based on what we've talked about in the past, that this was the level where people stepped in and started to pick up Ethereum because long-term holders or individuals who plan to hold the asset for long-term were willing to step in and buy the asset at this level. So we saw, the number of addresses holding 10 or more Ethereum steadily rise. And that just continued all the way through to about here in the end of October, at a price of around $4,200. Now, it's not coincidental why it was $4,200. The second that we got to our prior all-time high, right around here, so mid to late October, that's when you saw the individuals holding 10 or more Ethereum start to level off. And this is how the market works, and we've showed this many times for different assets. When you get to the prior all-time high, that's when your long-term holders start to take some profits. It doesn't mean they sell all of the asset, but it's just a repeatable behavior that we've seen, for instance, with Bitcoin, every single market cycle. Right when you get to the prior all-time high, long-term holders, high net worth holders tend to start to sell some of their asset. And that's what you see right here. As we're reaching this prior all-time high, this levels off and then in fact starts to trend downwards. So we had a spike in the number of people holding the asset, but then a general decline that continued all the way from October until here in December. Now notice that as we've been trending down, and this to me is the most bullish signal, as we've been trending down ever since December 7th, essentially, the number of wallets holding 10 or more Ethereum has been trending up, even in spite of the fact that the price has been dropping. So that means individuals have been willing to buy the asset and hold the asset, even in spite of the fact that the price has dropped significantly. In fact, if you look from the point where, this started to trend upwards, we were trading at around $4,000 then, and we got all the way down to $2,200 or $21,750. And so while the price was dropping, long-term holders or individuals who believe in Ethereum were continuing to acquire the asset. Now there was a significant capitulation that occurred on January 21st when we saw the price go from around 3,000 all the way down to approximately 2,550 in a single day. There was a capitulation, but notice what happened there. Right when that occurred, individuals stepped in at this price range from around 2,500 all the way down to 2,250. They started to acquire the asset, and we saw a huge spike in the number of wallets holding 10 or more Ethereum at that time. And so we've seen this continue through essentially all of late January and now into early February. What this is telling me is that this isn't necessarily always a short-term bullish sign. We could certainly see, in spite of this general rise in the number of addresses holding 10 or more Ethereum, we could see the price fall in spite of that in the short term. But, in the long term, this is a very bullish indicator. So overall, what we're saying here is, while we don't exactly know what is going to happen in the short term, we've seen these types of moves all the time in the setting of these larger downtrends. We're not going to go around waving the victory flag just yet, saying that the market has broken out. There's lots of other channels you can watch if you want that type of reactionary information. That's not what we're going to do here. We're going to keep a tempered approach to the market. We're going to, not become overly excited when the market goes on a 20% pump, and not overly depressed when we head down 20 or 30%. This is crypto. And if you let every move like this get you, into your FOMO phase where you're just dumping all of your money into the market, I think you're continually going to get wrecked. So what I'm suggesting is, continue with a tempered dollar cost averaging approach where you're using a dynamic strategy, dollar cost averaging more in as the market goes down and dollar cost averaging less in when it's going up, until ultimately, when we're approaching points of profitability, you're then dollar cost averaging out of the market, taking small amounts of profits as you go along. Overall, this is certainly something that's positive to see. We're seeing the number of larger net worth investors acquiring the asset. That's always a positive sign. So what we want to see from here is us get back above this prior level, right at around 280,700 wallets. And then after that, we'll be looking, to get back above this point where we're at with around 294,000 wallets holding 10 or more Ethereum. If we can do that, I think you're going to be in business. And, ultimately, I do believe you could see Ethereum trading at, prices like 5,000, 7,000, ultimately $10,000. It's just a matter of how long it's going to take to get to these levels. I mean, realistically speaking, Ethereum is the premier altcoin. It's, many people don't even consider it an altcoin, and I'm kind of in that camp. It has so many, apps built on it. There's so much value locked on the Ethereum network that, it truly does sort of, have sort of a stranglehold on on that aspect of the cryptocurrency market. So you do have competitors coming up like Solana, for instance, and that's the key competitor in my mind at the moment. So when you have things like Solana with very low fees and a very fast network, it's going to be a natural competitor. So I think you're just going to see Ethereum at the end of the day, just because of, the extensive network that it's built. I think you're going to continue to see where it is the, sort of the premier layer one blockchain as far as apps, value locked, etc. But you do have competitors rising. So, in my opinion, it's likely best to sort of to be diversifying your portfolio. Now, full disclosure, as many of you know who watch the channel, I'm heavily invested in Ethereum. When we head into more bearish times, I acquire Bitcoin and I acquire Ethereum and then a very small amount of other altcoins. And I'm just going to continue to do that. 3,000, $3,200. No one, in my opinion, should be getting overly excited about $3,200. Just just a month and a half or 2 months ago, we were trading at nearly $5,000. So I'm certainly, not throwing a party tonight because we're at $3,200. But I am going to keep dollar cost averaging once per week into Ethereum, depending on where we're at. And I will be, doing that using the DCA index risk model. If you guys are unfamiliar with what this is, it's a model which is designed to identify where market cycle peaks and bottoms occur. And the way you use it, you come to the model here and you just select Ethereum. And you can see where we're at right now. We're sitting at around a 41. So we've come all the way up from, we were down into this lower risk tier. In fact, we've only been at this, into this tier 2 times before. One time where we were here in 2018, and then one time here at the COVID capitulation event. So this was a fairly significant drop that we just saw. In fact, according to the risk model, the risk of acquiring Ethereum was significantly lower here in January, at the end of January, than it was even back in May. So, I think this was a great time to be acquiring the asset. But at the end of the day, it doesn't mean we're out of the woods yet. So, and we could just quickly draw that trend line we were talking about. Yeah, we're trading right at it at the moment. Okay, so all in all, things are looking good right now, but I wouldn't be just FOMOing into the market right now. I think it's better in the long run, if you're a long-term investor, to keep a measured approach entering the market. So if you're interested in the DCA index risk model, we have this for Bitcoin, Ethereum, and all of the top altcoins. You can head over to the Discord channel. You can sign up for it there. It simply identifies for you where market cycle peaks occur when you're in this 90 to 100 zone, okay, and where market cycle bottoms typically occur, as it identified here in 2018, here at the COVID capitulation event, and potentially here in late January of 2022. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.